So welcome. Thanks everybody for coming today. This is a really misunderstood topic and product. And so I've really been wanting to, myself, I didn't understand it. I understand more now, but it's a little bit hard of a concept to grasp. But it's an extremely valuable tool for people in many different situations. So it's an option for homeowners when you have some other requirements. So you get a break from me and Joelle talking so much today, and we're gonna let our expert Dennis Cooper here with Federal Savings Bank do the majority of the talking because he's the expert, okay?
Find out in a few minutes.
So, Dennis, you want to tell us a little bit about yourself and your history and?
Wow, I am kind of shy, but let's see. When I got out of the Air Force, I spent 4 years in the Air Force and figured out that I don't like standing in lines and I don't like taking orders from other people, so I got out after 4 years. Went to work for an insurance company in employee benefits. Over the next 25 years, I did insurance of all sorts, financial planning, became a branch manager and registered principal. Thought I was going to retire. Figured out I can only play golf twice a week with my knees. So a friend of mine said that Wells Fargo was hiring a reverse mortgage person. Well, I was a successful financial planner with an ego as large as the sun. And my question was, what the heck is a reverse mortgage? I had never heard of it. None of my clients certainly need a reverse mortgage. Over the last 15 years, I found out that most people could use a reverse mortgage if they wanted to, if they knew about what it was. When I do these kind of seminars, I usually ask for a show of hands. How many people have heard something negative about a reverse mortgage? Feel free. I'm used to it.
Tom Selleck.
Well, that's interesting. Since Tom Selleck started advertising, instead of half the room raising their hands, it's down to 2 or 3 people because everyone trusts Tom Selleck. Typically, seniors come up with 2 things. Okay, the bank is going to take my house, and it's much more expensive than a regular mortgage. And I usually counter that by saying, if you think about it, the longer you stay in your house and you don't make any payments, interest accrues, the longer you stay there, the more the lender's going to ultimately get when the loan is repaid. Why would the lender ever take your house? We want you to stay there as long as possible. If you don't pay your property tax, the county might take your house, but the lender's not going to. That usually satisfies them. Then we talk about it's more expensive. It is more expensive. I agree with you.
More expensive than?
A conventional mortgage, a HELOC. My product's a HECM, home equity conversion mortgage. It's nothing better, nothing more than the best home equity loan somebody at age 62 can have. Why? It's a fully insured loan. The heirs can never owe any money even if the loan is upside down. The borrower decides whether they ever make a payment or not. Each and every month it's up to them whether they make a payment. It's a lifetime loan as long as you stay in the home. It's not a 5-year or 10-year HELOC. It's a home equity loan as long as you stay in the house. Why wouldn't you consider doing that instead of a HELOC?
Does your house have to be paid off, or do you have to have equity in there? Or?
You have to have at least enough equity to pay off the mortgage. Some people just use a reverse mortgage to pay off the mortgage. But in my case, my mortgage was paid off. I did a reverse mortgage because if you establish a line of credit, we can guarantee the unused portion of your line of credit is going to grow by 5 to 6% a year. I replaced my bond funds with my house. I started off with about $170,000 line of credit in my house. Now it's up over $200,000. So when I ultimately need home health care, medical care, whatever, I'm going to have a large chunk of tax-free money available to me that I never have to worry about paying back.
And you get to stay in your house.
And I get to stay in my house.
And what do you call that again?
That's a home equity conversion mortgage. We take the equity you build up in your home, convert it to a mortgage, and give you the money tax-free. If you think about it, the people who do the reverse mortgage have the money tax-free. The heirs can't have to pay any money. The worst that can happen is they owe 95% of where the loan is. Let's say the house is worth $200,000, I lend $100,000, and they never make a payment. They live there 25 years. That sounds outrageous, but we're living to 85, 90, 95 years old. They never make a payment over 25 years, and somehow the loan balance gets to 250,000, but the house hasn't appreciated at all. It's only worth 200. Make the numbers easy for me. Person passes on, they leave the house to their heirs because it's nothing more than a home equity loan.
Right.
The heirs sell it for 200, they owe us 190, 95% of whatever they sell the house for. The difference between the loan balance of 250 and what the heirs pay back, 190, comes from the insurance that's built into the product. People who do the reverse mortgage have the money tax-free, the heirs can't lose money, the lender gets all the money owed.
So what is the insurance part you're speaking of?
The insurance is controlled by HUD. They keep a insurance pool to pay for any situation.
And HUD, it stands for what?
Home, housing and urban development.
Okay.
It's a federal government program.
So this is a federally insured
Federally insured
loan?
loan, right.
So is it FHA?
Yeah.
Okay.
Yeah.
Okay. So tell us some of the really the most common myths out there about the product.
Those two things. The bank is going to take the house. It's more expensive than a conventional mortgage. One of them's true, the other one isn't.
Okay.
Those are the two big myths everybody comes up with.
So what are the cases that the lender can take their house?
If they don't pay their property tax, they don't pay their homeowner's insurance, then it becomes, the reverse mortgage is called, we can't take the house, but the house is sold, so the lender gets their money. But typically, that happens when a person passes on and they leave the house to whoever they want. I did one on a house in Ellisville. It was sort of a farm house. And the house had been in the family for 3 generations. Kids wanted to keep it in the family. Well, the house passes them, all they have to do is refinance the reverse mortgage. A person's old enough, if they're 62 years of age or older, they could get a reverse mortgage to pay off the other reverse mortgage. So it's nothing more than a home equity loan. That's the thing that's hard for people to grasp. It's called a reverse mortgage because if you do a conventional mortgage or a home equity line of credit, a HELOC, you borrow X amount of money from the bank. Each month you're expected to make a payment, so the balance goes down. With a home equity conversion mortgage, you borrow X amount of money from the bank, but you never have to make payments. If you don't make payments, interest accrues and the balance goes up, just the reverse of a conventional mortgage. But it's nothing more than a home equity loan.
I see the looks on a couple people's faces here, so yes.
Or is that at a fixed rate or is it a variable?
You have a choice.
You have a choice?
Yeah.
Okay.
Okay.
And right now, the fixed rate, we're closing loans at 4.5, 5, which sounds pretty good when you think of conventional mortgage. We don't use the same interest structure that conventional mortgage do, so we're usually a little bit behind them.
So tell us again, what are some of the most common uses of a reverse mortgage and why do people apply for them?
Pay off the mortgage. You know, one of the examples I gave you earlier was, and I'm generalizing, a little old lady living in a $300,000 house that's paid for, but she's living from Social Security check to Social Security check. She has no safety net whatsoever. What happens if her car breaks down? What happens if her heat goes out? Create a line of credit. She needs it, she uses it. She doesn't need it, it grows. So paying off a mortgage is a biggie. Suddenly, you know, you're paying $1,000 a month for principal and interest. We do a reverse mortgage, you never have to pay that $1,000 a month. You become $1,000 a month richer. You can spend it on other things. In my case, a growing line of credit. One of the neat things about 9 years ago is HUD came out and said you can actually use a reverse mortgage to purchase a home. People want to downsize, upsize, right size, move closer to grandkids, whatever. You can use a reverse mortgage product to actually purchase a home. An example we talked about was, say somebody owns a 3-story house and their needs are somewhat like mine. They don't like going up and down the steps any longer. You help them sell that, create a bucket of money. They want to buy a $200,000 villa. They had 2 choices in the past. They could take that entire bucket of money that you got them, purchase the place outright, or they could take part of her down payment and then have a mortgage payment. Well, any financial planner worth of salt will tell you shouldn't take all your little capital and bury it in a house at 62 years of age or older. And I don't know anybody at 62 that wants to have a mortgage payment. So 9 years ago, HUD came out. HUD controls the product completely. They tell us what interest rates we can charge. They tell us how much we can lend. They came out and said you can now use a reverse mortgage to purchase that new place. You still sell that 3-story house, great bucket of money. I look at a $200,000 villa, at 65, I can lend about 50%. So I show up at closing with a check for $100,000. The client shows up with a check for $100,000. Part of the money you got them from the sale of the 3-story house. They purchase, move into and live in a $200,000 villa, having paid $100,000. And they never have to make a payment as long as either of them live in the house. I told that story to a retired vice president of HUD here in St. Louis. I always joke with him that he must have been at lunch the day they announced this, because his reaction was, huh. 4 days after our conversation, he called me and said, instead of that $200,000 villa you were talking about, my wife and I just put a contract on a $400,000 house. They were older than 62, I could lend more money. The older you are, the more you can lend. I showed up at closing with a check for $253,000. He showed up with a check for $125,000. They only offered $375,000. They purchased, moved into and live in a $400,000 house, having paid $125,000. And never have to worry about a mortgage payment as long as they live in the home.
So Dennis, with the way our market has been, that sellers aren't accepting contingent,
Yeah.
home sale contingent contracts, is this something that can be utilized in that situation?
We can get pre-approved, and it takes probably, with pre-approval, maybe 3-4 weeks to go from application appraisal to closing.
Okay, and what does that application process look like? What are the qualifications that are needed?
At least one person has to be 62 or older.
Okay.
And other than that, how much we can lend is based on the age of the youngest person on the title. So just depends on if you have the money you have to bring. And if you got at least one person over 62, that's pretty much it.
Okay, all right.
It's not as difficult as people would like to make it.
So I understand there's also some type of education or
Yeah.
class or something.
That was one of the
people
things
have to
that
take?
the reverse mortgage product was created in a very limited form 40 years ago. I was talking to a man on the phone, and I was talking to him about reverse mortgages. He said, well, I'm not sure I want to get involved in the government program. I said, well, this was actually created under Ronald Reagan. Suddenly he was willing to talk to me about it. Such is life in our country today. What's your question? I'm sorry, I got off track myself.
I was talking about, understanding there's like an education.
Oh, yeah, that was one of the things that was added since the initial beginning. We have mandatory counseling, and the mandatory counseling gives them information, a lot of the information I'm going to give them, but included in the information are 10 questions. And if they don't get at least 7 of the questions right, they can't get a certificate, which allows them to do the reverse mortgage. Unfortunately, in this country, there's a lot of elder abuse. And a lot of times, the elder abuse is by family members. One of the ways they can try to take advantage of the senior is to do a reverse mortgage on a house and they get the money. Well, if a person's not competent enough to get through the mandatory counseling, they don't get a certificate, I can't do a reverse mortgage. And I've had, over the last 15 years, done about 300 of these. I've had probably 2 or 3 situations where we didn't want to do the reverse mortgage, and luckily the mandatory counseling proved why we couldn't. So, yeah. But we can work with power of attorney. If the senior, is not quite cognitive, we can do if the power of attorney is in place, we can work with that. I was in one situation where they had power of attorney, and a family friend who was an attorney decided to write on the power of attorney. I don't know how much you know about legalese, but you can't do that. And that was the only copy of the power of attorney they had, so we actually had to go through the courts and get a guardianship. So another situation with power of attorney, a woman came to me who wanted to do a reverse mortgage on the house to pay for assisted living for her husband. Now, her husband's name was on the title. She was the second wife. Her name wasn't on the title, but she had power of attorney on it. Sounds good, right? Unfortunately, he saw a doctor in August, signed the power of attorney in September, saw a doctor in October, and the doctor noted there was a diminishment of capacity. So HUD was unwilling to accept the power of attorney because they couldn't tell when that diminishment occurred. Now, the power of attorney was signed in front of 2 attorneys and a geriatric care nurse. HUD was unwilling to accept it unless a doctor was present. well, my sense of humor, I said, you mean if a gynecologist was in the room when this man signed his power of attorney, you'd accept that, but you wouldn't accept a geriatric care nurse and 2 attorneys? And they said, yes, it has to be an attorney. Yeah, we got a strange world out there.
Yeah.
So, yeah.
So what does this class look like? Do you have to physically be there?
No, there are, I think there are now 3 agencies in St. Louis where you can go in person. 95% of the people I work with do it by telephone. It takes about 45 minutes. Not that difficult. I mean, if you're competent, they'll do things like a reverse mortgage is actually a home equity conversion mortgage. And then 5 minutes later say, what's a reverse mortgage? It's a home equity conversion mortgage. I mean, somebody who's competent can get through the, you don't have to study for this.
Okay. But yeah, really
But
it's just
yeah.
to make sure that they're competent
Yeah.
enough that they're understanding what.
Keep in
this
mind,
is.
it's not that the lender's nice people. The lender wants to make sure you stay in the home as long as possible because they're gonna make more money. They don't want this to put a contract out there that's gonna be problems with 2-3 years down the line.
So, having said that, is like if you think that you're going to get a reverse mortgage and then sell the home, is that a problem?
It's not a problem, but you're gonna have closing costs on the reverse mortgage.
Mhm.
And if you don't stay there more than 2 or 3 years, is it really worthwhile to do that?
Like
I-
any refinance.
Yeah.
I mean, you have to,
You can do
you
a
have to
refinance
figure
anytime.
it's-
Yeah, if you want to, you can refinance a reverse mortgage. The problem is you probably should wait at least 5 years. Why 5 years? Well, everybody on the contract will be 5 years older. The older you are, the more it can lend. Hopefully in 5 years, the house is appreciated in value, it's worth more, I can lend more. At that point, it makes sense potentially to refi a reverse mortgage. But, I mean, if you're spending $10,000, $12,000, well, you're not spending it, but $10,000, $12,000 comes out of the amount we can lend to close the reverse mortgage, maybe it doesn't make sense if you're gonna sell the house in 2 or 3 years to do a reverse mortgage. Probably what you should do is wait until you move and use a reverse mortgage to purchase a new place. Just depends on the situation.
So they always say your house is paying you. You don't actually get money, you're just not making a house payment
Oh,
every
no, you
month.
put money.
You draw on it, you draw on it, you draw on it.
Yeah, you establish a line of credit.
Okay, yeah.
If you need money 1 month, you fax in a sheet, I need $1,000. One of you sign it. Within 2-3 days, it's in your checking account. You just write a check off your normal checking account.
Okay.
You can
And
also
plus I'm
schedule-
not making a house payment and,
Yeah, but you can also use it. I have a line of credit at my house.
mhm.
That's, I haven't used it yet, but I mean, it's there
It's
when I need
nice,
it.
yeah, to have in case some
Yeah,
emergency.
it's a safety
happens.
net.
Mhm.
You can
Okay.
also schedule tenured payment. I want whatever the value is every month for 10 years, or I want it for a lifetime, a tenured payment. And simply what we do is we take the bucket of money that's available to you at closing, divide that by the number of months you want the payment, and you may get a scheduled payment of $1,200, $1,400, $800 a month, every month for that time period. I mean, a lot of different ways to use a reverse mortgage. It's a very flexible product. Just depends on what you need. My company produces these beautiful brochures, which I don't use, simply because, do people even look at brochures, first of all?
Do we want to
Second of
understand
all,
them?
I deal with people as a consultant. I decide, I try to help them decide what they want to accomplish. And there's just so many different ways it can be utilized. It doesn't make sense to give them a brochure.
What if you make any upgrades on the house?
You can certainly do that, sure.
Okay, but then to get that back out, you would have to do a refinance, or when the house is sold, that goes, the upgrades raise the price of the house and that goes to whoever.
Yeah, I'm working right now with a client that I wrote a reverse mortgage on, I think 6 years ago. They took all the money that they could and added 500 square feet to an 1,800 square feet house. So now it's 2,300 square feet. We're doing a refi to recapture the money from the house because they're both 6 years older. The house is certainly worth more money. They've added 25% of the square footage of their house, so they'll get more money out now. So, I mean, once again, you pick a scenario, I can probably help you with it. So.
Now, I'm assuming that your loan origination fees are much higher on a reverse mortgage than they would be on a regular finance?
No.
No?
No. The
Okay.
thing that's higher is the insurance.
Okay, and then, it can only be taken on a principal residence,
Yeah.
not a vacation home or
No.
rental property or anything at all?
It has to be your principal residence. By that we
Yeah,
mean you
live
live there 6 months and 1 day a year. Now, we don't have a reverse mortgage police running around the countryside checking on people.
Yeah.
How we find out you're not living there, you don't pay your homeowner's insurance, typically. Or once a year, a letter comes out, you still living here? You sent the letter back, yes, I'm still living there. And that's pretty much it, so.
So if you wanted to, you own your home now,
mhm.
and say that you want to buy maybe a home in a nicer, warmer climate.
Yeah.
Florida.
How could it be warmer?
Yeah.
Year round, okay.
It
So,
was 101 on Wednesday. I was playing golf, I know.
but also, when you say you're licensed in
All
how many
50 states.
All 50 states, okay.
Mm.
So you want to buy a second home and live in it, half the time, okay? Okay.
6 months and 1 day.
Can you have a spouse live in, say that's their primary residence? No?
No.
Okay.
FHA, you can only have one reverse mortgage at a time. Now, you can have a reverse mortgage, sell that place. I've done where people had a reverse mortgage on one place, and we were able to close on both the place they lived in and the new place the same day with the title company. So it's possible to use a reverse mortgage in a lot of different ways.
Okay, but you can't do a reverse mortgage on your primary residence and use that.
Oh, yeah,
as
you
a
could do
down-
a reverse mortgage in your primary.
Yes, that's
Take
what
that
I'm
money and
asking.
buy
Yeah,
the
buy
new
another
place,
house
sure.
someplace
It's your
else.
money, you can
Yeah.
use it for anything you want.
Okay, so you can take that, use that as a down payment on
Sure.
a second home?
Yeah.
Okay, all right. What about when people hold their properties in a trust?
That
Is
was
there
my
any
next
complications
question,
to
you read
that?
my mind.
If it's an irrevocable trust, we have no problem whatsoever.
Irrevocable.
Irrevocable. If it's revocable, I'm sorry, if it's revocable, we have no problem. If it's irrevocable, it means it can't be changed.
Yeah.
You can't add a mortgage to it. That's a problem.
You can, you can close in and out of a trust?
Yeah.
Okay.
Yeah. That situation with the power of attorney that I talked about where they wrote on the trust, we were able to do, we would have been able to do that even though it was in a trust, simply because he wrote on it to cause some problems. Yeah, you can, a revocable trust is very easy to work with.
So the tax-free cash, sorry, I am not very savvy on some of these things. Why is it tax-free?
Because you're taking equity out of the home. You can take equity out of the home. HELOC, you have a home equity conversion, you have a home equity line of credit, you take money out of your house, that's not taxable. It's also not impact Medicare, Medicaid, or aid and attendance benefits for veterans. Currently,
That's good to know.
knock on wood.
Uh-huh. Do you get changes in the qualifications?
Not that I'm aware of, no.
Okay.
They have a whole bunch of other problems they're dealing with.
Okay. Is the return rate guaranteed? You said 5 to 6%.
It's guaranteed, yeah. And it really has nothing to do with interest, so we're not worried about what happens in the market. If you think of the house as a bucket of money, you break it in two pieces, the amount we can lend and the amount we're holding in escrow for the potential accrued interest that occurs when you don't make a payment. If you don't use this money, the money we can lend, we're not gonna need part of this money, the money we're holding escrow. It drips into the bucket we can lend and it slowly increases. And we can guarantee that percentage.
So you can actually make a house payment if you want.
Definitely, definitely. And why would you do that? Well, for every $1,000 you pay back, that diminishes the balance of what you owe money on and increases the line of credit by $1,000, which you earn an increase to, so. It's a financial plan.
What if you don't have a lot of equity in our house? Because we're on our second life, divorced in
No.
15 years, so we've basically
You live
started
long
over.
enough that happens. Probably haven't happened yet.
But,
Trust me.
yeah, our house, we still owe $100,000 on it, and it's probably only worth 150. Where do we,
We would have difficulty working with that.
okay,
You have to have enough equity built up to at least pay off your mortgage.
Okay.
Or in your situation, if you had, let's say we could lend 75,000, 50% of your 150,000 worth, and you owed 100, you'd have to come to closing with $25,000.
Okay.
That's a large chunk of change.
Right.
But why would you do that? Well, if you're paying $1,000 a month, 2.5 years, you're ahead of the game. So every situation's different.
I mean, if you're getting a guaranteed rate of 5 or 6%, and interest on a savings account or whatever is 0.01,
Yeah.
you could take that equity, whatever it was, and have a guaranteed 5 or 6%, which in most cases, most seniors would kill for that rate. In the old days, you could get a CD at 18%.
Yeah.
And
when you
now
renew it,
you can't.
Yeah.
But, you know, with the market volatility and everything that's going on in today's world, a guaranteed 5 or 6% to somebody who has a little bit of cash, that adds up.
Yeah, yeah. Now, part of the application process for reverse mortgages, we don't recommend you take money out of your house and invest it in the market. Why? 40 years ago, the first reverse mortgages were sold by financial planners.
Yeah, but you're getting that 5 or 6% without doing anything.
Yeah.
You're just keeping that. You're not investing that.
No,
You're-
I'm
yeah.
talking about what happened.
Yeah, I'm not saying take that out and put it in the market. That's too risky for a senior.
You actually have to sign a couple forms in our application stating that you're not planning on doing that. What you do with the money after you close on a reverse mortgage is up to you. But because it originally sold by insurance people, financial planners, they tell people to do a reverse mortgage, take all the money out of the house and invest it in the market. Well, I don't know whether you're aware of this, but sometimes the market goes down.
Yeah, that's like buying a margin. Yeah, that's like buying a margin.
Yeah,
Yeah.
so, you know, you don't want to end up having no equity in your house and
Yeah.
you've lost all the money. So we have people sign stating, and we explain to them, this isn't something you should do. Once again, after the reverse mortgage is closed, it's your money. What you do with it is your business, so.
Got a question for you.
Yeah.
Because I got a situation that's gonna affect my life and, by March, I'm gonna start double dipping.
Okay,
Trying to figure out, I wanna invest my social security instead of just spending it. So would I be better paying off my house or putting it somewhere else?
in March,
Yeah,
I don't know what's gonna happen in March.
yeah.
You know, I wish I could tell, oh yeah, put it here.
You don't even know what's gonna happen in December.
No, hell, I don't know what's gonna happen in August. You know, we're in a very bizarre time in our country. I mean, consumer confidence is at an all-time low. Inflation's highest it's been in 50 years. Who knows what's gonna happen? I mean, the price of gas. I saw someplace I drove past today, it was only $3.56 for gas. I'm thinking, oh my God.
Excited, yeah.
I remember
It
I was
up yesterday and I was like, what?
I was in California getting out of the service, and I pulled into a gas station, and they wanted 32 cents a gallon for gas. I pulled out of the gas station, I wasn't gonna pay that much for gas.
Now look at you.
Yeah, I go to Sam's. But still, I mean, you go to the grocery store, you may not have noticed, but your bill is always higher, and you're buying the same stuff you used to buy.
Yeah.
Everything, you know, California, I think this month blocked 70,000 truckers from going in and out of California. Who brings your groceries? Truckers. You got all those barges or all those ships in the Pacific Ocean waiting to get into California. I mean, it's a mess. I mean, there's a lot of things going on that we have to do.
I ordered furniture
Oh, good luck.
and it took almost, it took like 20 months.
Yeah.
It was held up
Yeah.
in
Floating around.
California on a barge.
Yeah.
And so, yeah,
Oh,
crazy.
We're not supposed to talk politics.
Yeah.
You said you were gonna double dip.
Yep,
Okay, you don't look 65.
I am.
You are 65. Well, good for you. You're close to your full retirement age.
Yes.
So once you get there, you can make as much money as you want and not have to pay Social Security back any of the excess money. So in that case, yeah, it's good for you.
And instead of
Okay.
investing right now, what you might want to do is wait to your maximum age. Instead of double dipping, just let it grow. I think it's like 8% a year that your social security
Yeah.
payment grows.
Yeah.
You're not going to
You
get that
can
kind of
take it.
return in the market, so that's something you might.
Yeah, your full retirement age is probably 66 and 8 months or something like
66 in
that.
6 months.
Yeah.
Yeah, 66 and 6 months.
Well, I'm talking about even waiting until like say age 70.
Yeah.
And your monthly social security payment continues to grow. Do you have a financial planner?
Not really.
Okay. Do you know any financial planners?
I do.
Is it you?
You might want to talk to a financial planner and they'll explain to you the increase in your social security benefit as you hold off collecting. Might be an option considering the market right now.
Yeah, when you get your social security statements, it'll tell you what it is at each period of your life, so.
On another note,
Yes.
because values of real estate have gone up so
they have.
greatly, your home's probably worth more than what you think it is.
Right, we've
So-
just remodeled, so we need to get a
Yeah.
appraisal and see what it really is
You
worth.
should probably talk to a good real estate agent who can.
I know one.
Yeah, you
Yeah.
don't necessarily have to pay for an appraisal.
Oh,
You
okay.
know, a good reputable realtor will come out and give you information
So,
about
yeah,
what
that's
your
our
home is
thing,
worth.
like to know what it's worth now.
Oh, sure. Just for that knowledge.
Mm-hmm.
So, a reverse mortgage, when does it have to be repaid?
It has to be repaid when you're no longer living in the house full-time, which means you decide to move into assisted living, you decide to move closer to your grandchildren, you pass away,
Okay?
it's no longer your primary residence.
Okay, so what's the process look like? I had a reverse mortgage. I now need to, I can't stay in the home. I'm choosing that I need to go into assisted living.
By contract, you have 6 months to repay the reverse mortgage. Now, we don't have reverse mortgage police running around, so strangely enough, the family is the one that tells us it's no longer your permanent residence. But you have 6 months from the point that it's no longer your primary residence. But you can appeal for an additional 3 months twice if the house is on the market you're trying to sell. But house stays on the market for an entire year now, so.
Okay, so I move out, I'm in assisted living, I'm ready to, sell the house,
Mhm.
okay? What actually happens, the transaction with monies at that point in time?
When you sell the house, you pay back the reverse mortgage, you keep whatever's left.
Okay,
If it's upside down,
yes.
all that's owed is 95% of whatever you sell the house for.
So I wouldn't have, if I'm upside down,
You don't have to worry about it.
They just send you a check what's left over?
Well, you sell the house,
Right, you
Yeah.
sell.
and you pay the reverse mortgage back, so you're keeping that 5%. If you sell the house for 200, you send them a check for 190. Then the insurance kicks in, the rest is paid off.
okay? So let's say I have a reverse mortgage.
You're so young for a reverse
Oh,
mortgage.
I'm really close to it though. That's why this is so interesting. I'm like, man. And I pass away. I still live in the home. I pass away, okay? So what happens in that scenario?
You have a will,
Yes,
house passes to whoever you left it to. If you don't have an heir, it goes to your estate. The estate or your heirs are responsible for repaying the reverse mortgage. If you had a home equity line of credit on your house and you passed away, the house would pass to your heirs. The heirs are responsible for repaying or refinancing the HELOC.
And
Same
then
thing would happen.
what if it hits probate, like if there's no heir, no designation, no will?
You can turn the house over to HUD, and HUD will sell it.
So
And
it's-
if there's
is
money
it
left
seized
over, it
then
goes
at
to
that
your
point,
estate.
or-
If we do it and then he passes and I'm still going,
Wait a second, why are you putting that kind of?
do I still get to keep my reverse?
Yeah.
And keep going? 'Cause-
One of the neatest stories I have, I got a call from a man in Kansas. He wanted to buy a modular home. Now, he knew he could buy the modular home for $40,000, but he knew it was worth 60, so it was gonna appraise for 60. He wanted to use a reverse mortgage to purchase it. We went through the process. He bought it for 40, it was worth 60. He was happy, okay? 6 months later, he calls me and said, you know, put a new roof on, build a garage, put a fence around, paint it inside and out. I know it's gonna appraise for $80,000. I want to do a reverse to purchase. Okay, we did a reverse to purchase. It appraised for $80,000. At closing, I gave him a check for $15,000. So far, he owes like he had like $25,000 in the house. About 2 years later, he called and said, my wife just turned 65. At that time, everybody had to be at least 62. She just
Right.
turned 62. I want to do a reverse to purchase and bring her into the reverse mortgage. Well, that time I didn't take any commission. I figured I already got enough money from him. At closing, I gave him a check for $1,500. He owns the house. It was worth like $100,000. His wife's covered. That was like 10 years ago. About 2 years ago, after a lot of physical problems, he passed away. And his wife called me to tell me, and she said, what do I do with the reverse mortgage? I said, nothing.
Keep living there.
Keep living there. It's paid for. You don't have to worry about it.
That's, okay.
Yeah,
Well,
so
that's good to know too.
God knows it. He passes away first.
First, he's older, so he has to go.
Oh, sure, yeah. Like, well, there's a joke, but with this many women in the room, I'm not going to tell it.
You're smart.
Thank
And
you.
then, so I'm 62, so we're good to go with a reverse mortgage?
You're good to go if he was
Except-
62 and you were younger.
Oh,
As
okay.
long-
One person.
As long
Just
as
one
one person,
person?
60 yeah, it
Okay.
used to be everybody on the title had to be
Had to.
62, and I'd get these calls from guys who just turned 62 with a 42-year-old wife, thinking they could do a reverse mortgage. I said, well, you know, you can do a reverse mortgage, but chances are you're gonna pass away first, and she's gonna be left holding the bag because she's not in the reverse mortgage, she's not on the title. Well, once again, 9 years ago, HUD corrected that, so that as long as one person's
One.
62, the other person can stay in the home.
So, and then we just need to pay Laura on the house to do it, because unless it appraises for more.
Yeah, I'd get somebody to give you a decent appraisal, and,
Yeah,
you know, we can talk.
okay.
So, it's a non-recourse loan?
That insurance makes it a non-recourse loan. The lender, the only recourse the lender has is the house. We can't go after the heirs if it's upside down. The only thing that's guaranteeing the loan is the house.
Is that different than a regular mortgage?
Oh, yeah. If you're upside down, you got problems. Yeah, I mean, some people who
Yeah, you're gonna take money to the closing.
Pardon me?
You'll take money to the closing if you're upside down. You'll have to pay.
What's what?
Well, so if you have an irregular conventional loan
Mhm.
and you pass away, and who's responsible for that loan after you pass away?
Whoever you leave the house to.
Okay.
But say you did a conventional mortgage and somehow the house went down in value. Let's say 9 months from now, the price of houses go down, God forbid, but let's say you paid $200,000 for the house and something tragic happens in the market and the house is only worth $175,000. So you left somebody the house, somehow they owe $200,000, but they can only sell it for $175,000. They're responsible with a conventional mortgage. With mine, they don't have to worry.
So they don't have to pay it back?
No.
An heir?
No,
They can?
not with a HECM, no.
They can just walk away?
That's what the additional cost is, the insurance. You know, the seniors say, well, it's more expensive. I say, yeah, it is. Have you ever gotten insurance and not paid for it? This is a fully insured loan to protect your heirs.
The only thing you gotta remember to do is pay the taxes and pay your,
Bingo. Yeah.
Taxes and insurance,
Yeah.
right?
Yeah.
Okay. So it's totally different than a traditional loan as far as who's responsible for paying it
Yeah.
when you pass away.
Well, not really. The house goes to your heirs either way. Your heirs are responsible for repaying whatever kind of mortgage you have, whether it's a HELOC, investment mortgage, or HECM. It's the heirs are responsible. You don't have heirs, the estate's responsible.
Yeah.
And if you want, as an heir, you can always walk away and sign it over to HUD, and HUD will take care of it. I never recommend that because potentially you could get at least 5% out of the house in the worst scenario.
Right.
I have a question. It's all in this head going like this.
Yeah, I do that.
So I hope I can get it out to where you understand. When you first started talking about it, you were saying that when you get this, the money you make grows and grows fast.
It's not money you make. It's-
Okay.
It's equity you've left in your house.
Okay, equity you lived in the house, and that grows so much faster.
Right.
Now, can you ever take that out?
Anytime you want, it's a line of credit.
Okay.
Yeah.
So would this be, if someone had a house paid off,
Mhm.
yeah, do you have one?
Yeah. And I have a reverse mortgage,
Okay,
and I have a line of credit that's guaranteed to grow by 5 to 6% a year.
okay. That's what I was gonna say, because like what he's saying, it's true, you get like 1% on anything you have in there.
I'm getting 5 to 6% increase. Nothing to do with interest. It's just we're dripping money from the bucket that we're holding in escrow to the bucket I can lend, or I can borrow.
And I can borrow that, or can I just say, hey, I'm gonna buy an airplane?
You wanna buy
That's all I
it?
can think.
You must have a massive house.
Yeah, it's about this big, the runway would be about.
Oh, okay.
Yeah, yeah. But, I just thought, oh, I don't wanna say a car.
Yeah.
You know, you wanna buy something that's more money than you want to, you know, I don't know. Can you take that out? Then do you have to repay it?
You
Because
don't.
that's money you've made.
You don't have to repay it, but it diminishes the equity in your house,
Okay,
okay?
okay.
I guess basically accessing equity that you have in your home. So it can be a very strong investment tool.
Right.
Can be. That's why I say it's a financial planning tool on a mortgage chassis. It's not really strictly a mortgage product. When I talk to financial planners, I always talk to them in terms of, if you had a client that invested in a 401k for 30 years, wouldn't you recommend they use those dollars for retirement? Well, of course you would. It's the whole purpose of having a 401k. I have a product that people invested in for 30 years. They just didn't realize they were investing. They thought they were paying off a mortgage. But it created one of the best assets out there from a growth standpoint over the last 30 years. I can give them access to it on a tax-free basis. Why wouldn't you use those dollars, especially right now?
Right.
You know, people who have investments and they're typically just taking interest out of their investments. Well, the market dips. Suddenly they have to start taking principal and interest. Well, why would you do that? If you don't do it, it's a paper loss. And hopefully the market will come back and there really isn't any real sustained loss. Why wouldn't you take tax-free money from your house, which you can pay back if you want to, instead of selling off things at a loss? Wait for the market to return and you could then pay back what you have in your line of credit.
Okay, so what if you have excess money of, say, $10,000 in there?
Okay?
Okay, interest that you've, however you're saying, okay? Then when that person that owns the house dies, is that gone too, or who gets that? The heir?
That's equity in the house.
Okay,
It goes with the house. If you haven't spent it, it's still equity in the house.
okay.
Yeah.
Okay, so then you sell the house,
Mhm.
then you get that equity?
Sure, it's your house, it's your equity.
Even if you can't sell the house for as much, say this for me.
Okay, let's say you had a $200,000 house.
Right,
And we established a $100,000 line of credit.
right.
That $100,000 is still in your house. You haven't spent it, it's still in the house.
Uh-huh.
Well, if something happens, you can always sell the house for $175,000. You haven't used the $100,000, so you still get $175,000 in the sale.
Okay.
Okay, does that clear things up a little bit?
Yeah.
Okay. You had a question back there.
I did.
Remember what it was?
Yeah,
Yeah.
I do. I'm sorry. So when you take this money, and I guess especially if you're taking it as monthly payments, does that count as income towards income-based programs like Medicare?
No,
Okay,
not currently. Can't guarantee the future, but
right.
yeah, no. Medicare, Medicaid, aid and attendance benefits, any of those programs. It's tax-free equity from your house. So, you know, same thing's true with a HELOC. If you borrowed money from your HELOC, that wouldn't impact Medicare.
I think the fact that you talked about you could get monthly payments, that's where I got
Yeah.
thrown off a little bit.
Probably 95% of the loans I do are line of credit.
Yeah,
From my way, and I talk people out of getting a monthly income, because if you have a bucket of money, you get a $100,000 bucket of money, and you want it for the rest of your life. Well, if you have 25 years, you're gonna divide that by 25 times 12, you're not gonna be getting a whole lot. Well, what happens if your heater goes out or your car breaks down? That monthly amount may not be enough to cover it.
Right.
By establishing a line of credit, you have a lot of flexibility. One month you may not need anything, next month you may need 5,000. The line of credit just works a lot better for
Yeah.
most people.
Yeah, that's awesome. So, I think when considering doing a reverse mortgage, it would be very important to talk with somebody
Definitely.
who is an expert in it. And I don't know I know a lot of mortgage people.
Yeah.
I only know a very, very few that offer reverse mortgages and do it on a regular basis.
One of my
Yeah.
best referral sources are conventional mortgage people. Even if their company offers reverse mortgages, they still refer them to somebody who actually works in the market. It's not the same animal as a conventional mortgage. It's not the same animal as a HELOC. There's a lot of difference in the product. It's a little more complicated if you don't work on that product. And there are people out there whose company supposedly does reverse mortgage. They've never done a reverse mortgage. If you took your car to a garage and there was a guy there that was called a mechanic, but he's never worked on a car, but he's a mechanic, would you really want them working on your car?
No.
If you're considering it, talk to somebody who's actually done it. I look at myself as a consultant on your part, because I have no idea what you're trying to accomplish. I know all the different ways this can be utilized, but it's up to you to tell me what you're trying to accomplish, so that I can help you try to do that.
I know from, being in the real estate world, there are very few people that do actually understand them. There are places that offer them. In fact, I invited a lender that I've had a relationship for over 15 years. I called them and I said, hey, we're doing, our next thing is on reverse mortgages, and I thought maybe you might want, to be educated on it, wanted to invite you. And he's like, well, we offer reverse mortgages. And I'm like, no, I didn't do that. And I didn't know that. And he's like, oh, okay. And he's like, but yeah, no, I would love to come. And I'm like, okay. And I said, it's going to be Dennis Cooper. And then he said, oh yeah, that's who I send my referrals to do reverse mortgages. And I said, I thought you just said you do reverse mortgages. And he's like, well, we offer them, but I don't do them. They're a little bit more complicated. I just, refer them out, so.
See, that's the thing, trying to find somebody that's competent to
Yeah.
do what that I don't understand. That's,
Yeah, I've been doing this for 15 years. There are probably 2 other people in the St. Louis megapolis that actually focus on reverse mortgage. My company is a veteran-owned bank. About 40% of us are veterans. We have 1,700 employees nationwide. 25 of us do reverse mortgages alone. It
we'll
just,
take a list of their names.
Yeah.
no. I'm the only one in St. Louis, so I'm safe.
That's good, I will pass cards out.
I do.
So, yeah, I mean, it is very specialized,
Yeah.
and I would think that it would be important for, when it involves a purchase real estate transaction, that agent, reach out to whoever that reverse mortgage lender is. It's probably been about 2 years ago now, I had a client who, I was selling their home. I got them under contract to buy another home. They were gonna do a regular conventional mortgage, and then they talked to somebody and they decided they were gonna do a reverse mortgage purchase. And I didn't even know. I'm like, what? You can do that? So it wasn't really different at all. The numbers were different on the final closing statement. And because they switched midstream, it caused a little bit of a boggle there because they went from conventional, we already had the appraisal done. The reverse mortgage is an FHA insured, which meant
We have to
an
get
FHA
appraisal.
appraisal had to come out.
Yeah.
That was really the only difference, and had I known going into it,
Yeah.
you know, we would have gotten it right from the very beginning. So they were still able to, you know, make it happen, and I think we needed like an extra week or something, but.
I typically tell people it takes 5 to 6 weeks to do a reverse mortgage from the time you actually have your counseling. You have to do the counseling first. I do a financial assessment. We're not that concerned about your credit scores. Yeah, well, anything over 550 I can work with. I pull people out of foreclosures. So.
That's a low score.
Yeah, it's not that difficult. And we use different interest factors, so I mean, we're a little bit more liberal. What we want to see is you have a consistent pattern of paying your bills on time. Why? We want you to pay your property tax. We want you to pay your homeowner's insurance. Why? Because we want you to stay in the house as long as possible because, why? We make more money. I'm a nice person. Lenders aren't.
So I had a client who had a home she thought was at least worth $1 million. It was at one time, but this was in the period that values were lower than that. All her money, her house was paid off, okay? She couldn't pay her taxes
Yeah.
on the house. So she was in jeopardy of losing her house because not being able to pay the taxes.
Yeah.
So
I
we
was-
did get a reverse mortgage.
I was working with a couple, they won the lottery 21 years ago. He quit working, she quit working. So 20 years they'll live off the money they got from the lottery. Well, if you wait 20 years to get a new job, sometimes you have difficulty getting a new job.
Yeah.
They had $1 million house. They spent a lot of money, gave a lot of money to their church. Their house was just, they had all these statues and all this crap, collectibles and things. They couldn't pay the property tax. They didn't have enough income to actually do a reverse mortgage because they didn't have any income. And they didn't have any money left from the 21 years ago. Those are frustrating when you have a house that big, that gorgeous, and you can't do anything because you can't pay $3,000, well, in that case, maybe $5,000 or $6,000 of property tax. It's just, yeah.
And they didn't have a financial planner.
Well, they did, but he was suspect too, so, yeah, I mean,
He was only worried about his wallet.
he got his money early on, I think, but, yeah. Unfortunately.
Run.
Can someone with a reverse mortgage take out additional loans against their home?
No, reverse mortgage has to be the only loan on the home. Why? Well, the loan guarantees, the house guarantees our loan. You can't have a HELOC, you can't have a conventional mortgage. The reverse is the only thing you can have.
Could they combine it though?
No, no, reverse mortgage is a reverse mortgage.
But if you already have if you don't have a first mortgage and you have a HELOC,
That has to be-
you can work with that. and
That has to be paid off
that-
by the.
Yeah,
from the
you
money
pay
we put
that
out.
off with the reverse mortgage.
Yeah.
Yeah.
But you make it happen all at one
Yeah,
closing.
So you can pay the other loan off with
Yeah.
the
yeah,
reverse?
we'll do that the same day you sign the contract.
Yeah.
Well,
Just like a regular.
3 days after. you sign
Just like
the
you
contract.
pay a regular mortgage to a mortgage lender when you sell a house.
Yeah.
How about new construction?
I've already got a house. No. Sorry. New construction, you have to actually do an appraisal on the house.
Okay.
So typically, we're talking about a bridge loan through the construction period, and then we kick in with a reverse mortgage after that. So, you can't do a reverse mortgage if you can't do an appraisal on the house. So you have to wait till the house is to the point where it can have an appraisal.
Okay, so you roll the bridge into the,
Yes, we pay off
Okay.
whatever's left of the bridge with the reverse mortgage. You look confused, I'm sorry.
Yes.
We offer community development block grant home repair loans. So they're 5-year forgivable loans, 0
Yeah.
interest. They're forgiven, obviously, after the 5 years. We've had clients apply for our program, and we've approved them because they showed they were, current on those reverse mortgage payments, because we didn't quite understand how it worked.
Okay.
Is that, I mean, I'm not asking did we mess up, but because I think it's a HUD program, but, moving forward, if somebody's got a reverse mortgage, they really shouldn't be applying for.
It shouldn't be, because once again, your loan, the house is guaranteeing your loan too.
Correct, yeah, we file a deed of trust and.
Yeah, you probably, if they have a reverse mortgage, probably need to talk to their attorney. I don't play one on TV, so.
We've only run into it like twice, once, so.
Now, are your loans for the home improvements, are those income-based?
Okay. People have the misconception of, reverse mortgage is people who are desperate and they have no money left,
Yeah.
and it's the last loan you should take. No, it's not. It's the first loan you should take.
Yeah.
It's tax-free money.
Smart people.
Yeah, I mean, you establish a line of credit. In my case, my line of credit's growing. Knock on wood, I go to my doctor each year and he says, bring all your medication. I bring my Juice Plus. I mean, hopefully it's gonna last, but I mean, at some point I probably will need different things and I'll have a bucket of money I can utilize for that, so, yeah.
And there's no call end date on the loan.
Now, you do a HELOC, it's a line of credit, it's usually 5 years, 10 years if you're lucky. Then you get with this massive increase to an interest rate. We were talking about, having an annuity, and they were getting 18% return. Well, you're not gonna get 18% return if you renew your CD. Same thing's true with a HELOC. You may have a 5% on your HELOC. 5 years later, well, it's now 18%. And you either that or you gotta pay it off right away. With mine, as long as you live in the home, nothing happens. So, yes.
So you said there's no you don't have to make payments, but that you could.
Sure.
Obviously, it would affect your debt to income, but is it affecting your credit score that you just got this loan that you're not making any payments on at all?
I don't believe so. My credit score has diminished.
But you haven't used any of yours, you said, right? Your
No.
line of credit?
Yeah.
So if somebody exhausted their full line of credit and didn't repay it, obviously they'll pay it back when they sell the home.
Yeah, but it's tax-free money. You're just taking equity out of your house. You're not incurring any additional debt. I mean, I wouldn't see that impacting your line, your credit score.
What if you take a loan and you never use the equity and you die or whatever?
The equity's still in the house.
Equity's still in the house, but is there interest or something that builds into that
You
loan?
only accrue interest on money you withdraw.
Withdrawal?
If you don't withdraw money, you
There's
don't
no
accrue any
interest?
interest.
No interest?
Yeah, it's just there for you when you need it.
Okay.
It's a difficult concept to grasp.
It's almost, it's like too
Too good to
hard
be
to
true.
believe. That's why I keep shaking my head and going, there's a catch here somewhere, why can't I figure it out?
Yeah, like I said, I've been doing this for 15 years. I've done about 300 of them. I've never had anybody call me and say, gee, I wish I hadn't done this.
Yeah.
I call everybody on their birthdays. I have a quirky nature. I call them on their birthdays. They're happy to hear from me. I did one on a man who was a hoarder. From the outside, his house looked great. You walk inside, there was a trail you could follow to his living room, which you take another trail to the one seat on the couch that didn't have crap all over it. There was a disgusting coffee table there with an ashtray full of ashes and butts. I never made it past that point in the house.
Yeah.
We did a reverse mortgage on the house. His birthday comes around. I call him. I said, just wanted to call and wish you a happy birthday. Silence. And they said, you're the only one that remembered. I thought, God, how sad. And I thought, well, at least he's got me.
Yeah.
The situation was, his house backed up against the field, and across the field, his mother lived in assisted living. And every day he would trek across the field, and his only interaction with other human beings was the people living in the assisted living. But, okay, At least he had me.
And he got a loan on that, huh?
Yeah.
You can get a loan on, modular home?
The only thing we have, yeah, we can't do mobile homes. We do have some problems on condos, unless it's a site condo, which means it's separate. Other than that, we don't have any problems. The problem we have with condos is the condo association has to be approved by FHA. And that can be a problem, because
Well,
typically.
aren't most of them though FHA?
No. No. The majority aren't FHA, or they have FHA approval and they let it lapse. We have a unit in my company that will actually help them get FHA approval, and we don't charge for that help. But they have to provide documents and information.
Yeah,
Sometimes the homeowners association
they
doesn't
won't
want to
get
do any
it
work.
out.
Sometimes they don't actually have enough reserves in their account. That can cause problems, so.
And there's now a lot more involved with the, where was that, down in Miami, where the building collapsed?
Yeah.
Oh,
There's a
Oh,
lot more
yeah,
documentation to it, so. I know as realtors, when people are looking to, buy a condo, one of the first questions we ask is, okay, what kind of financing, would you be getting? Because if they are getting an FHA loan, we can only look at communities that already are FHA
Yeah.
approved.
Yeah. Villas don't cause a problem, site condominium. A national company was working with this couple here in St. Charles, and they turned him down because he lived in a condo. Well, I'd actually gone down to the location, and it was a separate unit. He was paying homeowner's insurance on both the inside and the outside. It's what's called a site condominium, because I actually went out and saw the place rather than dealing with a company in California. We were able to get the condo approved, so.
So you're calling that a what?
Site condominium.
S-I-T-E?
Yes, S-I-T-E. There's a site where you're paying for both the property.
Okay.
So in this area would be more or less a detached home.
Yeah.
Doesn't have to
Or,
be.
No, there are condos that you're paying for both the outside and the inside, and even though you may be butting up against somebody else's.
well, but you're paying your outside through the association.
Yeah,
You're paying your outside and then you're insuring your contents on a contents policy.
right.
We talked about at our last seminar, all the different kinds of animals.
Yeah.
What are condos, what are villas, what are, attached, detached, and all that, so. Well, this has been really, really interesting, and I'm so thankful that you were able to come today and share this information with us. So,